Hello, everybody. This is Chris Smith from theoptionclub.com. Thanks for hanging in there with us. We've got off to a little bit of a late start, just trying to make sure everything was just right for you guys. If you look in your chat box, you will find a link that will allow you to download a PDF file. And that PDF file will be something you might want to have available during the presentation so that you can better follow along with what Charles is going to be talking about. Now, hopefully everyone can hear me. People are saying they don't see it. Make sure you're looking at the chat window, and I will try to copy and paste it back in there. So, sounds like you guys can hear me. You should be able to see the link. While you start downloading that, what I'm going to remind everybody about is that this is an educational presentation. We are not here giving you trading advice, but we are trying to provide you some general education about trading and about options in particular. The person who you will be hearing from tonight is Charles Cottle. He is an extremely well-versed individual when it comes to the subject of options. He probably knows more about options than the rest of us combined. And in any event, what we're going to talk about tonight is how to establish a time and price target and how to set up an options trade to take advantage of that. And with that, Charles, if you're online, I'm ready to pass this over to you.
Yes, I'm ready.
All right. You are now the presenter, and all you need to do is push the show my screen button.
All right, I think I've done that. It says a pause button now, so I guess I'm good.
I can see your screen.
Great. Great. Well, welcome. Thank you very much, Chris, for that glorious introduction. Hope I can live up to it for everybody. Okay, we're going to talk about Dimonetrics today. It's a technical analysis system. It is compatible with any technical analysis system in the world because it's see-through. It will be pulled over your screen, your charts from whatever source, and you can draw Dimonetric grids using my software to see where there might be an opportunity based on a likely expiration range in the options or a bullish scenario or bearish scenario. It basically is trying to identify trends and where trends intersect, where bull trends intersect with bear trends, and where they do, the bulls and bears are sort of accommodating one another in a tug of war, if you will, and there's a likely region where there could be the expiration range so that you could play with a butterfly, a broken wing butterfly, a condor, any kind of a wing spread. If it's at the lower end of a trend area, it could be, played with a vertical, a bull spread, and then later when it's reaching resistance, putting on the bear spread to finish a condor or a butterfly and doing it for a credit, or being aggressive at one end or the other with extra verticals, meaning you're putting on a broken wing or what some people call an unbalanced butterfly, or what I always called ratioed butterflies or skip strike flies, whatever is warranted. Then if you run Dimonetric grids on implied volatility charts, you might have an idea of where there is support or resistance in implied volatility. If volatility is high, butterflies are cheap, and therefore you could get a good price on a butterfly. If volatility is low, perhaps calendar spreads or using a straddle strangle swap, or what's otherwise known as a double diagonal, some kind of calendarized butterfly, calendarized iron. There's just many names for these sorts of things. And so that's what the opportunity is going to provide us with if we have a pretty good idea of what the underlying does, how it behaves, and what's likely to happen based on kind of developing the idea of what's normal behavior and what's not normal behavior. Excuse me. So right now, if the Dow dropped 1,000 points, sometimes, maybe not right now, maybe right now, we'll take a look, but sometimes that's normal. That's expected. Not that it's predictable, but if it happened, you'd go, yeah, okay, yeah, it's at the north end of its range, and the south end of its range is a 1,200, 1,300, 1,400 points away. Certainly a 1,000-point drop would still leave it in its bull trend. We'll take a look and see. So let's dive right into it and go to the second screen. And right here, I just pulled up, this is Intel on the left. Well, it's on the left and the right. But I just pulled up a raw chart of Intel, and I'm just drawing a bunch of trend lines and intertrend lines, connecting tops to bottoms, highs to highs, lows to lows. Usually I like the Edwards and McGee approach of connecting a low to a higher low that's followed by a higher high. For example, this is a valid trend line right here at the bottom because I'm connecting this to this point. Why can I connect it to that point? It's because this subsequent high is taking out the high that's subsequent to the first low. That makes a valid trend line. If I tried to connect this low over here to this recent low, that would not be in biblical technical analysis a valid trend line because it does not yet have a high that's taken out the previous high, following this low, this most recent low. Okay? So, but you could do anything you want, draw any trend lines you want, and once you do, then pull up a grid, and I'll show you what I do when I pull up a grid in a moment. And then I start stretching this symmetrical grid. There's up channels and down channels. These green ones, these fat ones are called what I call wick zones. The red fat ones going down are bearish wick zones. And then these skinny lines, green for up, red for down, are what I call half channels. And sometimes I turn those on and sometimes I turn them off, depending on whether the market seems to like them, a particular underlying. So I then stretch and pull this to accommodate as many of these preliminary trend lines as I can. Sometimes I don't even put the preliminary trend lines because I can see them. But most of you who may be new to this, fill up your paper, fill up your chart, your charting software with a lot of lines, and then pull up your grid and see what you can do to accommodate it. And then once we do, then we delete all the trend lines, and then we tweak it. And we keep in mind the concept of fake outs and breakouts. So what I call a fake out is when the market is trying to be a breakout, like it's passing through resistance or support, but then it turns around and comes back. And usually what I like to do personally, not everybody has to trade my way, is I like to wait for 2 days in a row where it closes above or below these support and resistance line for me to get out or to take off or adjust my position. I always put on limited risk plays. So even if I am wrong and don't take it off at the first opportunity because I'm waiting for 2 days to close and it's just zooming through, I still have a limited risk play on, so it's not the end of the world. But there's a lot of overreaction, and there's after having been a market maker, I know what goes on. We are nasty in the way that we set off stops. there's lots of funny stories in my book about that, but one of the famous ones is when Tom Baldwin, the famous bond trader, the bond futures trader, he was the king of setting off stops. He would, back in like 1983 when I first met him, he used to trade 100 futures, and that was a lot, and everybody was going, whoa. But by the time I left the floor in the mid-90s, the guy was doing like 5,000 lots. He would take whatever size was necessary to muscle the market towards the stops in order to set them off. So, for example, if there are stops, and he knows because he's standing next to the brokers who have a bunch to sell at, say, 03, whatever the handle is, 03, and it's trading 09 bid at 10. He'll go 9 sellers, sell them at 9. He'll just muscle it down 9, take out everything, all the bids. Then it'll trade 9, 10, 9 to 8, 9, 8, 9, 10, 9, 8, 9. Then he'll go, sell them 8, sell them 8. And he'll keep muscling. He'll accumulate as many as he can. Eventually, he's sold so many that he's pushed it down to 3 at 3. And that triggers the stops. It goes 2 sellers, 1 seller, sell them at even. And then right under the bonds, they're traded in 30 seconds. So it's 31, 29, 28, 27. It's a free fall. Now it's setting up even more stops. 24, 23, 22, 20, 16, 14, trading 12, and then boom, he's down there buying them, buying thousands, just scooping up all the stops. So I invented this back in 1988 with this kind of thinking in mind. I didn't perfect it until way later, and honestly, I did it for directional, but I found that it was much better to find an intersecting bull trend and bear trend. So let's just pull up this chart here, because I got the work in process. There's my Intel. Oh, this is not Intel. It's Microsoft. I'm sorry. It's Microsoft. The chart is of Microsoft. Both of them are Microsoft. So here's Microsoft, MSFT, right? Just drew a bunch of lines. Then I pulled up my diametric grid, and you could see by pulling on these dots, I can stretch it and scrunch it. I can, pull it like that. I can change the thickness of these wick zones, and I can make them thinner. And then I could, I could even swivel this, but I usually like them perfectly symmetrical, so I'm not going to swivel it today. But you could download the trial and play with this thing and stretch it over any chart. And you can see that I can maneuver it in and find places for it. So let me put back these, I turned off the majors. So you could turn off and on all these different controllers. It gives you all the pixels where it is. I can modify the colors, all right? I can zoom in on some of this stuff. I can, take a closer look with this magnifying glass to see if it's coming out, popping out here and there. I can make the magnifying glass bigger. There's a whole lot of stuff I could do, right? So then what I do then is I'll turn it off for a minute. I'll get out of it for a minute. I'll go to the platform, and I will just delete all the trend lines. Delete drawings. All right, it's different in all software, but I'm basically turning off all the noise that I created by just getting an idea. And then I'll open back up the Dimonetrics, and then I'll slide it into position. And what I'm trying to do is accommodate the trends and place it, and keeping in mind the support and resistance that's in the market. So, all right, I just parked it for a moment. I don't know if it's the right place, but I stop and I take a look. All right, and after I do this a little bit, I'm then going to show you how many do I have. I a dozen or so, or 20 or so. Let's see. I have over 30 grids to look at. And I've chosen ones that worked, some that didn't work, just so you know, this isn't the kind of seminar where you can make 300% on every trade. Guaranteed. It's not like that. We have losers. But we have decision-making that we can do based on this, right or wrong. And that's the power of it. It sort of slaps me in the face because actually I'm one of the most bearish people in the whole world on the stock market. But I buy it all the time because guess what? It goes up. You gotta buy it because the trend is north. I don't agree with what's going on in Washington. I don't agree with the corruption with the banks and everything, but they're in control and they're buying this stuff up and the trend is your friend. So you go with it. All right, let's take a look at some of these points over here. I'm just going to get rid of this controller box. I'm going to drag it over to my other screen so it's out of the way. What am I looking at? What I like about it is, for example, over here, right about December, right about the turn of 2010 here, the end of 2009, beginning of 2010, you could see that this top here connected to this bottom here over in July, that makes a nice inter-trend line. And parallel with it is a top over here in June and another top here in August. I love that. And then when it broke out, it bounced off it again. I like that. I like a lot of points hitting and validating my grid. There are invalid grids and there's valid grids. What I don't like about, and by the way, this channel is symmetrical with this up channel here, which has a lot of points touching it over here, not much touching it at the bottom. So I'm just going to slide it up so that it's now touching these points here above June of 09 and just kissing it here almost in July here, but it's also touching it over here at the downside on the upslope of the downside of the channel over here in October, over here, and over here in the beginning in May and June. So I have a lot of valid points. Now I have some wow, what I call wow and flutter, or some going back and forth through the wick zone, and I hate that because it has a tendency in my mind to be erasing the validity of the grid. So there's this point here, this downslope right here in August. I'm not a big fan of that. Although if I look closely, okay, it's broken out. Did it come back down? Yes, it came back down. I don't like it when it comes back in. But when it did it have any closing days? Did it have any closing days below that grid? And the answer is, where am I looking? Here. It didn't close the first red line. It came back up. Second day closed down. Third day closed out of that area. So that's a fake out. So that's not erasing it. And it stayed in the next diamond up here. So that one I like, in spite of the fact that on first glance I don't like it. It came up, it held. It came back down, it held. It came up, it held. It came down, it broke through. Shouldn't it break through? That's the dominant trend. It's going to break the pink ones until further notice. It went up, it stopped at this area here. It broke down, it stayed down, but then it came back through again. Okay, so it's choppy and sideways, but it's still legal. It's not invalidating it. And then finally when it does broke down, it stays down. Now here, again, it breaks down but comes back up. It closes below it here. If we zoom in here, it closed below it just by hair, not making me move it, adjust the grid. I could leave it for now because it's not like I hate anything about the grid yet. But it wasn't two closes below it. So I'm staying with this grid. Stayed above. When it finally did break down, okay, it didn't go back into that diamond. It was in the wick zone, didn't go back in the diamond. Came down, held, went back up, held, down, new diamond, didn't stay in it long, and then resumed an uptrend. Now here, I don't like it. It's wishy-washy. So there's, and over here, I don't like this. So what can I do here? I can slide the grid a little bit down to the left or up to the right. Up to the right makes more sense. Why? It's resistance. Because if I pull it down, even though it's legal, it doesn't make sense. Right? I'm going to pull this down and show you what doesn't make sense. Pull it down. Now it's not violating. It might have changed some of the violations back here, and I can see that it does. But what I just don't like about it, even though, okay, it's legal, it broke up into it, but then it goes down. That's not up. It's down. So I don't like that. So when I have a choice in this matter, what I'll do is I'll make that a resistance point. Now, when it held, boom, and it stayed and followed the channel down. That makes more sense. And over here as well, with one little fake out, but it didn't close 2 days over it. Same thing here. So this is all legal, and then finally we're breaking here. So, all right, I did a little tweak. Did it mess it up? Going back, up, down, no. It's okay. Closed above, in, boom, okay, boom, boom, boom. All legal, 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 legal. So this is a valid grid. So I'd say, okay, that's good. I'll place my little thing here because it gets saved, right? Chart, save. I move this off because sometimes I get a ghost. And I'll just name it. I will name it MSFT. I'll show you what I'm naming it. MSFT, the date 0421. I can add the year 11. DJ, Dimonetrics Java. And now I'll just hit Save Grid. I'm going to do it off the screen. So it was saved successfully. And the beauty is that I can go and open any one of thousands of files. Here's all my old grids. Let me talk about that for a moment. You know, we can see more of them. But here's some British pound futures. Here's some inner pounds against the euro over here. And you can see a bunch of dates in it. Now, sometimes, like over here, I named it B because I needed to make a new grid at this point. On June 29th in Apple, it was starting to make my grid look crazy and not valid, so I had to restretch it and change it and make a new one. So now I'm in the B's. And there's C's and D's, and sometimes I just say, I cannot map this thing, and I abandon it. So that's how, and when I do pull this open, I can pull up any old Apple, 629, eject the chart, eject, yeah. And then I can pull up Apple, the stock, make Apple behind it. So I'm going to change the symbol to Apple. And then I could pull back open my grid, look at the, pull up the chart on another page, and then slide this thing to accommodate the date and see if this newer chart is validating what it used to do a year ago, 6 months, 8 months. And so what I want to do now is close this, and I'm going to pull up a gazillion grids, and we're going to talk about that now. So that's, you tweak it, okay? And so now I'm talking about updates. So I'm going to show you, we're just going to go through a bunch of grids that I had, and you can see here by the date that this older grid, it's the exact same stuff. Sometimes the scale has changed, but if you look at the relation of the highs to the wick zones sloping up, down, you'll see that these are almost in identical spots, okay? So right here, today is, we're getting close to May here in April, but the last time the first time I started doing Apple was back here in, looks like January, okay? Or end of the year, first of the year, right? And it's followed in this diamond ever since. And it's followed in this, and when we look for an expiration range, we talk, usually try and target where the diamonds are coming to a corner, a vortex. Somebody has their microphone on, so please turn it off. Okay, so this is Apple, and it stayed in the grid, and it bounced. Look at this line. By looking at this first chart, it's saying this is going to be support someday, right here. This upsloping, there's nothing touching it. It's not a traditional trend line, but it's parallel to the other ones that are very valid. Look at all these tops. Look at these bottoms forming this wick zone. Finally broke. And look at the downtrends when they happened. They didn't happen too often in Apple, but when they did, they kind of adhered to the mirror, the symmetrical image of it. And now it said, okay, it looks like it's here. It could break through. It probably will break through. In retrospect, it's easy to say that it would, but it's the dominant trend, so it probably will. Not necessarily today, but it turns out that it was very soon after it broke through, and when it came down, it sort of hugged this mid-channel for a while, and then hugged the mid-channel going down. And when it finally did find support recently, it bounced in the wick zone, which, where did that come from? Came from Dimonetrics. It didn't come from any other source. It sort of has this cyclical predictive power that's, you know, pretty amazing. Doesn't work every time, but it's great for setting your stops, bailing out, adjusting your position, taking some chips off the table, whatever the situation is depending on your strategy. Let's go to the next one. ADSK. Okay, ADSK. A lot of validity with touches. Some not many sloping down, but when it is, it's sort of adhering to this, but it finally breaks through. It's the dominant trend. It breaks through. Nothing else really to talk about ADSK. Just going to keep going. You all get a copy of this in the PDF. You can zoom in at your end. All right, AZO, obviously a bull trend, and it follows this. Its dominant trend is north, so it busts it, and then over about here, it has this little fake out, and I might have been stopped out here out of my long, but I might have gotten back in down here when it came down to support, and it had a little fake out here, and it's resuming and busting away. So this is a little anomaly, but everything's good, and this downtrend is symmetrical with the uptrend. Baidu. We're obviously in a bull market, so most of our candidates are bullish, but we have some bearish ones in here. Okay, the next one is Cisco, we will see. So what did it do here? Let's see. So after we originally drew it back in September, it subsequently broke, went down, but resumed a parallel channel and hugged the mid-channel. It likes mid-channel. Look at all this mid-channel support on the downslope, mid-channel resistance. So now it's mid-channel support at the moment. Okay? BTU. BTU ran into trouble. Okay, it went up and up and up, did a little bit of consolidating here, and when it finally came down, it's right here, right now. I don't know what it did today, but it might have been a fake out down there. Cisco. Okay, here's finally one with a bear trend. So we drew it back here in December, and when it did rally, it found resistance at the intersection of the upslope and the downslope. It's neat how these tops are running right into, and these gap shoots are going right through it like a gap shoot line, all parallel with the up move. And when it finally did come down, it found support right on this channel. And when it tried to rally, here again, where would you have gotten this line? Nowhere. No other charting software. Maybe Andrew's pitchforks. You know, I started doing Andrew's pitchforks before I invented this, so I was heavily into those, and it sort of follows along with drawing lots of parallels. Okay. DJX. Okay. Now I said before that there are times when a 1,000-point move is normal. Like when it hit here. What was this? This is May. Oh, this was the flash crash. But it wasn't surprising that it was down so much because it had room to move down there, and it would still have been bullish at the time. Is that the flash crash? I think it is. Yeah. All right. When it finally did bust out, it found support. All right. So how did we do? Blows right through. It's a bull market. It's the dominant trend. When it came down, it had a little fake out, but it held. And right now it's slowed down here recently, and now we're up through. And why not? Dominant trend going north. Inflation. You know, we have inflation. The government doesn't tell us we do, but we do. And the dollar's weak, and the dollar being weak makes a strong stock market because for most of the people who are still buying our stock market, they live overseas, and they're buying it with foreign currencies. And so their currency and gold is stronger, and so it makes our stocks cheaper, and they're a bargain in their currencies. Okay? Makes sense. FFIV. Here's a neat one. This was one of the strongest stocks in the market. And it finally, back in November, it made a high here when we did this, and we drew this trend line because of the seasonality or the cyclicality of it, how it kind of did it at those breakpoints in parallel or in a mirror image or symmetry with the up move. And we didn't know it at the time, but look at this. It became the trend line coming down. Now today it rallied up into it, but then broke down. It was trading lower. It's a red candle here. So I don't know what it's going to do, but it might just hold and zigzag its way down. Or it could just leave this in the toast, but you play it that way. You say, okay, I'll do it in a limited risk fashion. I'll sell a vertical, or I'll buy a cheap butterfly to target right in here for May, or right in here for June. A bigger butterfly is more expensive. Closer, it's more expensive. Further away, it's cheaper. Nearer range, cheaper. So this is a cheap play for this. Won't cost you a lot of money. If you're right, you make a lot of money. But you have now a reference in what to do. What butterfly should I pick? I don't know. And this gives you sort of a chance to target one. FSLR. This is kind of cool. Look at this. Back here when we drew the grid, August, September. Okay. Now, notice it's it's the same relationship, the underlying to these grid points. The grid is not different, although it looks different. Notice that this date is in line with this date. My pictures are shifted a little bit, but they're pretty much in line here. And this running into the green zone is running into the green zone there. Coming down to support and right here. Almost touching it down here. At this point, it touches the wick zone here. Running up into the wick zone here is where it runs here. So relative to each other, they're identical grids. It's just that the scale changed over time, and there's functionality in your software that you can put in a high and low price and have it consistent. And sometimes I do that. But sometimes if it's been a chart that's a few months old and I haven't done that, I can easily just sort of line it up using these dots and some other methods of lining it up to these vertical lines here and the horizontal dates. I can line it up. And look what it found. It found resistance. Where would that have found resistance? That's equivalent to, bouncing off this, looking for that, is saying this is going to be resistance out here. It's going to be resistance. And it actually broke this line, subsequent here, and it found support in this line here. And it had a couple of fake outs in here, but not closed twice in out of the zone. And then, boom, break. Came close to the half channel, rallied up, broke again. And this invisible, what would be invisible to any other system, that line, this downsloping wick zone. Here is the Aussie dollar, FXA, the ETF. Okay, what do we see here? Broke the up channel. It kind of went sideways, lingered, found support at the half channel, bounced off, followed the half channel, powered right through. Wasn't necessarily the dominant trend, but it's going to go through one or the other. So it had been a dominant trend north. It kind of went sideways. We don't know if it's going to be down or up. It shows up. So this is a parallel up channel to the previous. Didn't know it. Likes the half channels. This one, like them here, like them here, like them on the down. So you can see the symmetry. And I think the symmetry happens because most of the players are the same players. Like you take Apple, for example. The same people are playing Apple over and over and over again, aren't they? People who do options, they do them, regularly, every expiration. The market makers certainly do. They're market makers at Apple. So it takes a certain personality. It's not like it's some random underlying. You want to do Dimonetrics on highly liquid stocks that have highly liquid options, meaning the bid asks are very narrow. And next week, you should look for a video that I just did on the bid ask spreads and why it's a no-no for day traders trading options. There's very little you could do with day trading and options, and I talk about it in that video. All right, so here's FXE. What do we got here? Okay. Symmetrical, perfect symmetry in the uptrend and downtrend. Tries to break and then rallies again and follows the same symmetry north. Pops out here, doesn't go up right away, zigzags in there in the wick zone and then powers through. Now, is this a fake out or a breakout? I don't know. Is it overdone? It's running into the up, it's not parabolic, doesn't have to be. Parabolic really doesn't have to be. We'll see silver when it does, and usually the parabolic moves end on this outlying wick zone. It's uncanny how it works. Here's gold, GLD, the ETF. Now, when it breaks out, and this, I don't think it's 2 days here that it broke out. 2 days closed, but it came back down. It's bounced right on this wick zone and then off to the races north, following this similar pattern, slowing down here, slowing down here. It'll slow down most likely here next time. Google. Now Google's wowing and fluttering through this, but there weren't 2 closes before, and this was very helpful. Chris attended the Sedona Elite Retreat, and there was somebody who had put on a broken wing aggressively aiming north, Google, but when it got here, she pulled the trigger. Unfortunately, she didn't buy the weeklies, which would have been a naked put. She bought verticals, which won big, and she protected it somewhat, but it didn't perform like a weekly would have, and that was the thing to do. That's what she had planned to do. She didn't follow her rules, and as it went and gyrated up and down and followed this trend line down then, she made some amazing adjustments and was able to salvage the wreckage and lose a fraction of what she would have lost had she just hung in there. I think she had $24,000 in risk. She lost $4,200, including commissions, and that was a great salvage, salvaging the wreckage. She did it in a very calm manner, with Google dropping some days $10 or $15, $18, and giving her, she had comfort in knowing that the symmetry was in place and she had limited risk positions on, and she never did quite get bearish. She did feel bearish, but she never did play for it. But even though she had a bullish position, she was down more when it broke 600 rather. She was down more than when she was down more money when Google broke 600 than she was when it was down at 570, for example, because of the way she defended it. And having a good solid defense and finding the right things to do at the right times, having your action points based on having some technical analysis background such as this. You don't have to be a rocket scientist. It's just kind of like art, really. You just sort of stretch it and see where the symmetry is, and then validate the support resistance with as many points as you can, and then tweak it and see if it works for you. Goldman, look at this. Goldman breaks, doesn't necessarily go down, kind of sideways to down, but look where it hits a wall. Why should it hit a wall there? What called that wall? Another example where Dimonetrics finds it where others don't. Okay, now here is Johnson & Johnson. It found the symmetry down, and the last couple days, I don't know if they got some kind of approval. I didn't look at the news, but obviously it just tore right through the corner of this diamond. Basically, it's just going back into this dominant trend that it was following the first four. It's basically up 4 diamonds, down 3 diamonds, up 2, down 1, and then maybe it's just going to resume. So maybe this is going to be, we'll look back on this in history and say, oh, we want to redraw our diamond because maybe tweak it a little bit. And I mean, it had a nice long few weeks in there. Well, it's bona fide, it's legal and everything. But just to see this is kind of unusual. I mean, compared to the last several charts, we don't really see this too often, where usually it'll follow in this one. It doesn't blow through like that. So it did. It happens. Coca-Cola. Dominant, dominant, dominant. This is support. I usually like to have this as resistance when it's following it down, but it's basically sideways. Finds its support. Okay, this was drawn only in December, so what did it do since? It had a fake out here. Again, if you had limited risk on and the patience of waiting for 2 closes like I try to do, you wouldn't have been out, and it worked out. It seems to me that I have this kind of, no, it's lined up right. It's lined up right. I'm just wondering what this is here. Oh, that's this point here. Never mind. This point here, it blew through. It was at a top. Some people might have gotten short there playing for this corner, but you quickly took a quick loss here because it was into this diamond. So this is an area where you say, okay, maybe I'll do a bear spread and hoping to do a leg of butterfly, because remember that a butterfly is a bull spread and a bear spread. So you do the bear spread first, hoping to do the bull spread later. Now, the bull spread might be too cheap. The credit spread and the puts might be too cheap to sell right now, so you don't want to sell it anyway. So you're going to do a bear spread anyway instead of a butterfly, even if you think it's going into this corner here, right? Playing for this intersection here. But if the bull spread, the credit spread and the puts is too cheap to sell, you're not going to do that. And the next day, you would have been out because it would have said, you're wrong, get out, and you would have taken a tiny loss. A May vertical, or rather an April vertical that you would have played for here. This is, sorry, back up. Here we are in December. You would be playing for this would be the January expiration. So the January has over 30 days to go. That vertical's got a small delta. It's not even going to move that much. So you would have taken a small loss in Coke. And maybe even got long at that point, right? Boom, it's going north. Hugging what would be a half channel. This doesn't have the half channels drawn, but you could see that about halfway down, not really, that's why the half channels aren't there. I wasn't crazy about them when I originally drew it. Okay, NDX. Look where it ran into trouble here. Out here in space, at the wick zone, at the downsloping wick zone. A lot of validity, a lot of highs. This low here, this other low here, likes the half channels. Nice chart. Here was yesterday or today. Yesterday, I think. Today, maybe. Not sure. It's at the top of it. What's the dominant trend? North. It's not going to hold here and come back down and assume a bear trend. Probably. You could say. Normal behavior says it's going. And it's near the lower end. It's got a lot of room to move. Up. A lot of room. McDonald's. Okay. From the point where we drew this thing, none of these grids have been adjusted. They're the same grids as they're just updated. And, you know, when you open up your software and you just slide the grid, you open up the old one, you eject the old chart, you slide it into place, and you tweak it. And you try and match up the highs and lows to where they hit the diamonds and the vertical and horizontal lines. Hug the, after this, it hugged this northern wick zone right here, came down and stopped at the new wick zone. That was this resistance line, this zone. The reason I like zones is, and the reason I have them transparent, is because hard and fast lines doesn't work that way. When Baldwin, in my example, set off all those stops at 03, it took it all the way down to 12. Took it down to the next handle and 12 ticks in my example before he started scooping it up. It does that when stops are set off. That's the way it happens. The market makers put their hands in their pockets and they just let it drop. Oh, is this NDX again? Oh, I have it twice. Okay. Bonus. Okay, Netflix. Okay, Netflix is one of the strongest stocks alive again. Although one of my hedge fund students, guy made about $150 million last year, well, a professional market maker hedge fund guy. I taught him back in '91. He's king of the industry that I know, at least that I had anything to do with. He doesn't do what I tell him to do anymore, but no. But anyway, he's actually hates Netflix only because Amazon hosts Netflix, Amazon.com. That's where we host our videos too. And they host all of Netflix. And now if you buy the premium version with Amazon, you're a premium member. If you become a premium member of Amazon, you get all your books sent to you within 2 days, shipping for $80 a year. But they also give you streaming videos, and they have about 5,000 titles, not 30,000 like Netflix, but he thinks that their competition is going to be bad. But technically, it's still good, right? Still in an uptrend, love the half channel, tried to break. He shorted over here. I don't know if he got out over here, probably didn't. I don't know. I haven't talked to him. I talked to him, I visited him in Fort Lauderdale about a month ago, and I don't know. We'll see. I'll talk to him. So, is it running into resistance here? My guess is would, because we're at the northern end of both of them. So it could come down here. It would be normal for it to break. How much is this? You can easily go to like 160, break $80 or so, and still be bullish. That's the beauty of seeing it this way. It's normal. It would be normal for it to break $80 over a couple of weeks and then resume its bull trend and take out the highs. That's how it works. You ever notice that? Happens all the time. NTAP. Okay. Busted, held over here, followed the line, ran into, where did this come from? Out of nowhere. Out of nowhere. Just its diametric symmetry and cyclicality, and when it came down, it found support. And another, where did this come from? It's just parallels to those. Followed it up, never really went into the wick zone, but damn close. Good place to take profits, not waiting for it to come into the wick zone. You know, certainly if not here, then there. I don't look a gift horse in the mouth. And now it's running up into here. All right, the dominant trend, is it north or south? Is this a parallel channel, or are we going south from here? It's a big, I don't know. So maybe you don't play anything. Or maybe you have a cheap butterfly that you put on back here for May that's targeting right here in this middle portion here, about, looks to be about 49. Maybe that's what you have on. And it's playing right. It's coming to Papa. OEX, okay, found resistance out here in space. Again, where did it come from? This is the exact same grid. It kind of knew it was going to run into that and have trouble. Doesn't know what it's going to do after that. It just knows it's going to slow down. And this was like huge up move. This is, you know, all the radio people and the CNBC and everybody saying, wow, we're in a bull market. Gosh, it's never going down. It's up, 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 up. Hello? Here's where it could go down, and it did for a little while. Hasn't taken out the highs yet from where it was. Pepsi. Okay. Okay, it went in sort of a sideways diamond, not anything really to do, but it's coming up to a point to do something. Okay, it's just sideways. If you take off the diamonds for a moment, just say, well, here's your highs. You got 4 tops here. You got some bottoms here. Yeah, it's sideways. When should I get short? Well, maybe here. Maybe when it gets to that point. When it's zigzagging, it gets to that point, then it's got a few bucks that it could go down to where it could find support, and it probably will, just right in here. So play into this sidewaysnessism. Where sideways? Sideways from here? No, sideways from there. Where the intersection is, where the middle of the vortex is for May and for June, and even tighter for July. It's sideways. There's no dominant trend, up or down in this one. Red Hat. Okay, what did we do here? After this diamond was drawn, it busted out, dominant trend, found resistance though at this channel here. When it came down, came into the intersection. Bullish here, right? Because it's got the downsloping and the upsloping when it has this little mini diamond, this darker, where the shade, where the transparent wick zones are overlapping each other. It's a little bit darker, showing a diamond. That's a good point to buy. Rallied up, found resistance over in all this sideways consolidation, a traffic jam. When it came down, it kind of ignored the wick zone, and it tested this low here. It's been going sideways ever since. Then it popped up. So this is kind of wow and fluttery. Maybe needs a redraw, a stretch, something. Kind of erasing the line, if you will. Down through it, up over it, down through it, back up. You know, I hate that. And that's when I say, got to redraw it. So at the very end of this, once I get through all these, there's not that many more, I'll redraw this one. I'll pull it up and show you what I'll consider. Don't know yet. It's going to be live and impromptu. RIM. Okay. Up here, it ran into trouble, tried again, made it, held, zoomed up, it found the half channel, which I don't know who else would have had any resistance there, but it happened. When it came down, it found support. We'll see what happens with RIM. RUT. Okay. When it came down to this point here. Okay, now here's an example of, well, wait a minute, why is this here? This came from really long ago. So there are some points touching which you don't see. Oh, here they are. Here it is, right here. Over here in March of whatever year that was, probably 09. Yeah, it was 09. Of course it was. March 09, the low, right? That's where this line's coming from. But what could you have connected to it? There's nothing else touching it. Well, this low and this high formed sort of a parallel channel, and this here, this downslope connected those two tops, and there was symmetry that followed with more symmetry, which followed more symmetry. Okay, so it's probably here. Exact symmetrical diamond. Let's try it. Boom, there it is. Whoop, there it is. And look at this. Look at how it's stalled there. How could it predict that many months in advance? Certainly it's the dominant trend. It's going to break it, but it gives you a chance to slow down. Maybe if you were short, you had some more chances to cover. You had some time. You had some erosion if you had some short verticals. And maybe you didn't even lose. Maybe you covered it when it did finally bust out of here on a bona fide 2 days in a row. And you're out. Maybe you're long now. Everybody's different. Starbucks. Okay. All right. Wasn't drawn too long ago, so it did stop at the half diamonds. It likes halves. So the half channels, it stopped at. So silver, here's hyperbolic, right? Okay, so it busts out. It's in a parallel up channel. Where's it going to stop? Nobody knows, but I bet you this is the likely place. This wick zone, it has just an and it's coming into an intersection. So maybe even though silver's probably going to $1 million an ounce, right? Because the world's messed up and all our regular money's going towards worthless. It's worthless. It's worthless. Going the way of the Weimar and the Zimbabwe money, right? Print, right? Silver might slow down here and come back, work its way down, just give back a couple of weeks, and then boom, off to the races again. SLW. It's just drawn recently, so it did run in from based on what we drew back then. It did find resistance at this wick zone, so it's a wait and see. SPX. All right, since we drew this, powered through, why not? Dominant trend. When it did fall back, it found support at this wick zone, the same one the RUT did. TBT, the inverse treasury bond. And so it works for that too. And it's back in its downtrend here. Will it hold or will it rally? And then steel. Steel. Down, down, down. Change the scale, but you'll notice that this low here is touching this low here, and this high here is touching. It's all tied in. This did it up here in this diamond, way back in the first high there, right? So it's the same one. Peeked its head out, didn't close twice over there, came down, found support at the wick zone, but oh my goodness, we might be in for a new trend, or it might be some sideways. So these you got to be careful of, because generally, you know, step back, look at the forest through the trees. Hey, wait a minute, Charles, this isn't necessarily trending up or down. It is sideways, so it could be, right? But right now it's kind of following this diamond. Will it go into this one or will it go south? I don't know. All right, so that's the slideshow. Let's get rid of that. Let's go into Red Hat and pull up that RHT. Let's pull up Dimonetrics. Let's open, chart open, and let's go to Red Hat. Let's go into where I have the current grids. What I have is the different folders. So Red Hat's over here. There's two of each, the first one that I'm using and the last one that I'm using. So here's the one drawn yesterday. Let's eject it, chart, eject. And it's only off a day. So it would, you know, I would slide this over just one day like that. So now we're updated, but now I want to consider saying, okay, I don't like it busting out like this. What can I do about that? Well, if I pull this in just a little bit, like that, all right, or what did that do? All right, well, first of all, what did I do? What I was trying to achieve was saying, okay, this low and this high, I don't want it to bust through that. I don't want it going down, up, down. Okay, going down through it, but then up into it, but not through it, that's holding. And it found this one. Fine. Now we're into that one, though. Okay? Now, I could leave it, I could check to see if that messed me up back there. Here was a fake out, so that wasn't it. There, it messed it up here. Look at this one. Those are more than 2 days close below. So I don't like that. So I got to tweak some more because I got to get rid of this. So how do I do that? Well, let's see. I can stretch it out more like this. I can go all the way out like that and say, how does that look? Now that makes like a bona fide break. It messes up things up here. Don't like that. And you know, maybe I have to abandon this whole thing. I don't know at the moment, but I'm going to just try and see if there's some new symmetry, because I'm just not liking to play RHT with what my grid, it's becoming fallible, if you will. Okay. Ooh, that. Ooh. Ooh. Look at that. All right, let's take a look at this thing. Okay, so there's some goofy stuff up here. So I might want to just thicken up the wick zone here by just going 26, 27, 28, 29, 30. All right, and maybe slide this just a little to make that a fake out instead of a breakout. That held. That held. That. Ooh, well, it came out, and it didn't come back into this diamond. It came into the wick zone, but it held. And went all the way to the top, came down, held here with a couple little wicks out, and then boom, it's right there. So I like this better than the other one at the moment. All right, so obviously we have several points touching the lower wick zone. We have several points touching the higher wick zone. How about the downs? Did it slow down? Well, when it did break out, it held. When it did go up, it held. It came down, it held two places here. It ran into trouble over here, and it bounced in here. So this is pretty valid. So all I do is go chart. I'll do it so where you can see it. Chart save. I update the date to the 21st. Because it's changing it, at the end of it, I go B. Now I'm following the B lineage. And I'll hit save. And now it's been saved successfully, and the next time I look at it, I can pull up either one, you know, from that point on. So let's see. I don't know how much time I've wasted. You've wasted another perfectly good hour listening to Car Talk, listening to Risk Doctor. Let's see what my clock says. I can't even see what my clock says. Let me see. I have no idea. Oh, there we go. 7:11. Papa needs a new pair of shoes. Okay, well, it's maybe about 40 minutes. At this point, I don't know. I can't see any questions. Maybe Chris can ask some questions. And then we have my associate, Steve Rosenbaum, who's going to tell you about some amazing offers we're going to get you going with to help you with your options trading, including Dimonetrics and some other options consciousness that'll be good for you to see lots of examples in real time what happened with these things. So I'm done. Unless somebody has a question or Steve's ready to talk.
Well, Charles, should we take some questions first and then have Steve come on?
Sure.
First question I have is a couple people asked whether this works in any time frame.
Right. Does it work? The question is, does Dimonetrics work in any time frame? And the answer is, I don't know. I only know what I like, and I like 2-year log charts personally. But I know lots of people who use it for even 30-minute charts and day trading and all sorts of things. People twist and tilt. It's got a lot of powerful features, as you'll see when you download the PDF to see how you can swivel things and change the thickness of the downs versus the ups. The channels that are going up could be wider than the ones going down. Just a quick demonstration of that. So when you do this, you pull on that, you can make the ups much wider. You can have the slopes be different from the up channels than the down channels. And then you can have it snap back to symmetry too. So I don't really know. You got to just play with it.
Yeah, I think we could take all the questions that are not answered here and finish them up in two, or maybe one in a little exercise here. The first is that all the charts we looked at are log charts, right?
Yes. Log charts, yes.
The other request that we had was, can we pick a chart and just walk through the process from scratch?
Sure.
So the question is, what chart are we going to pick? And if anyone wants to type in a symbol in the question box, the first symbol I see that makes some sense to look at. All right, Patrick was quickest on the keyboard. He typed in ISRG, which I believe is intuitive surgical.
Has it got some good options volume?
I think it does.
All right, let's assume it does. right away you could see the symmetry here, the up and the down. So if I'm new at this, what I'll do is I'll just draw some trend lines connecting just tops and bottoms, something parallel right in here. You could draw that, although that's not a valid trend line, but it is parallel. I won't draw it though. I'll just draw valid trend lines. Look at that. That's like a top of a house, you know, and it's just zig, zag, zig, right? And then I like to usually find some inner trend lines, like a high versus, you know, some lows or something here. That doesn't work. How about here? It's not parallel, but it's in general. Or I could do it from this point here, this little thing here. So I can see sort of like my parallels coming up, right? So then I pull up the grid, and I just say it just defaults to the last one. So I could just, what I want to do is make it neutral, so parallel. You know what I'm going to do is I'm just going to close it out for a minute and reopen it. Alt X is what I do. Close. This is what it looks like when you, and it will default to all your favorites. Like you'll see that mine's symmetrical when I open it, and it's got these white dots, and there's some significance there that I won't go into right here. It's explained in some of the other things in blue dots and diamonds, these controller points. But basically, I'm just going to scrunch it to these preliminary lines that I drew and try and slide it into place and find some kind of compromise. It's not quite. I could put a tilt on and say, well, it doesn't go down at the same rate. But what I like to do personally is I'm heavily into symmetry. So I'll just stretch it a little bit and move it. So now the black lines are in my way, so I'm going to take those away. I'll just minimize the diamond for a moment. I will remove the trend line, delete the drawing, all the trend lines. Yeah, and then I'll just pull up this. Now I'm going to just study it for a moment. It's pretty good the way it is. I don't need to be that thick on the wick zone, so I can narrow those up. They're way too fat. So I'm going to narrow them up a little bit, and the half channel as well. The half channel plays a little bit of a role, kind of gives me a nice reference point. It's working a little bit. All right, so now let's see the problems. Okay, there's a problem here back in July. So I got to slide it down to accommodate that, to hold that, or up, away. So I'll see first, pull it just down a little bit because I have this nice inner trend line, high, low at the moment. All right, kind of wedged in here. I want to, that messes that up. Maybe I need a little bit bigger of a diamond because it's popping out here, it's popping out here. So I'm going to make it a little bit wider both ways. First up, then over, and then slide it back into place. I'm just looking at it, thinking to myself for a moment. Okay. I'll tell you what I'm looking at in a moment. Just let me think. Okay. Let's examine it from top to bottom. All right. Starting out, we have an inner trend line here with 3 nice points. Slow down, bottom, top. Okay. Breaks through, screams through, holds at this level here, and comes down to support here. Rallies into this diamond, works its way up. First time up, hits it, bounces back, comes close to the downwick zone, like that, hugging the mid-channel. Okay, runs into consolidation here. Where it came from, I don't know, but it's there. And then the next point, look at all these points. Wow, nice. And then following on, yep, it's good there. And as far as breaking this, okay, it had a fake out here held, and when it came out, it was a fake out again one day. Just bring up the magnifying glass for a moment. Right. right, so where are we looking? Where it busted out right here. Right there. Closed over, but one day, but not the next. Okay? Kind of a key reversal of that little move. All right? And holds at the wick zone and half channel and breaks down, bona fide break, comes close to the down zone near the diamond. So it's like a negative, two magnets coming together, right? A negative and a positive pole, kind of not letting it get there. Rallies up, hits the wick zone, breaks it with a gap shoot line, holds at the mid channel, busts, finally out, and it's a symmetrical channel at the moment, and it's slowed down here where we are now. And its dominant trend is still north, but this is a zigzag kind of market. It could easily be a downtrend starting. So that's that one, and I'll just go ahead and save it. Chart, save, ISRG, and I'll see it in a, I'll either make a trade based, some bear vertical or something, and I'll be out tomorrow if it busts it or whatever, or soon if it does. 0421 DJ. And then just hit save grid. Where is this? My cursor. I need my cursor. There you are. Save grid. Okay, so that's ready for me next time. I want to look at it. But what I would do is I would go over here and say, okay, May expiration, where we're going to be, we can easily test this if it doesn't bust. And since it's May and since it's a $320 stock, 357, I'm not going to do a bear spread in this because the bull spread part of the vertical is going to be expensive enough. So let's pull up the May chain. Hold on. And by the way, this isn't a recommendation. Steve told you at the beginning. But let's see. This is running in at about 345 or so. This resistance here, right here, halfway between these two lines. So let's call it 3. This is 320, 340, 360. It's about 350 is where, and the low on that butterfly will be 310. So the 310 to 350 is where it's going to, it's targeted. So we could do a 350, something 310, 320, 330, 300, let's see, let me just map it out in paper here. 310 and 350. And the exact middle is 330. So like the 310, 330, 350 butterfly. So I'll just minimize this. I'll go over to my chain. And in these big stocks, I like wide butterflies. So trade or analyze either one, ISRG, May. Let's look at deep wide, 1 month, 2-strike butterflies. And the 330, 350, 37, the 310, 330, 350 is about $3.50. So you're risking 3.5-ish to make 20-ish, to make it go to 20, meaning 16.5. You could easily double or triple your money and get out of this thing, or harvest some baby butterflies in here, because this has 4 baby butterflies in it. So if you do a 10 lot, there's 40 baby butterflies. You probably know from reading my book or seeing some other videos that I have, some of them free. And depending on how much time and the value to go, and Risk Illustrator certainly measures that. Some of you have seen that. But one other consideration is, let's look at the vertical to vertical, because maybe we just do a bear spread at the moment. So I'm going to see deep wide 1 month 2-strike verticals. And this is the 333.50, which is 5/10 bit. You know, it's marked at 542 and a half, and the 310/330 is what we're selling 190. It's not even half as much to get back. So generally speaking, it's almost too cheap to sell the 310/330 at the moment. Now, somebody who's aggressive might sell 3 times as many 310/330s, generating 570-ish after paying 542-ish, and with a little bit of slippage, it probably could be done for even money or a little tiny credit. Would be an aggressive way. But I myself might buy the 330, 350 right now for 5-ish, looking to later sell the 310/330 for, say, $3 or something, at least getting enough credit to help pay for the other one. Because right now, the butterfly, it's not worth doing in my mind. And what I would do is saying, okay, well, wait a minute. I can buy the butterfly for 3.5-ish, or I can buy the vertical for 540, call it 550-ish, right? 550 versus 350. So 550 divided by 350. Oh, I didn't do it right. Clear. Let's say 550 divided by 350. It's about 57% more money than the other one. So I might reduce my overall cost. So if I was going to buy, say, 10 butterflies for $3.50, that's $3,500. Divided by, I only want to risk $3,500, divided by that 550, and I'll just do instead about 6 verticals for now, spending the same amount of money. So I'm not going to do the same quantity of the vertical as I would the butterfly. And that's how I would play it. It's not a recommendation, but it's an example of how the decision-making process happens. And then I would put it in Risk Illustrator. I would dissect it out, and I would see, well, the vertical, I mean, doesn't be dissected, but once I get the butterfly in, then I'll dissect it all, and I'll see what my subcomponents are for eventual harvesting. Next question.
Next question. I think we have pretty much hit all of the high points. Someone want to know if this works on the Macintosh OS?
Yes, it's finally working on Macs, but make sure you send an email to diametrics@gmail.com to get specific instructions. I have not yet uploaded the new setup files for Mac, but I will within the day. You know, I'll get it up there. Just have to talk to my technical guys to find out exactly what I got to put up there and how, and rename the file and things like that. So send me an email, charles@riskdoctor.com, and I'll get you sorted out, or diametrics@gmail.com. Either one will get you sorted out with the Mac.
Okay. And I've had a few people ask, and I'm sure there's more out there wondering, Dimonetrics can be overlaid on top of pretty much any charting application that's out there, right?
Yes.
So you don't need to use Thinkorswim. If you like, BigCharts.com, or if you like Metastock, or you like, whatever charting program you like, Dimonetrics lays right on top of it.
Exactly. It's just see-through. You could see on my screen right now that it's just seeing right through what's ever on my desktop. I can even do it over this. I won't, but you could see the trading page or the analyze page on Thinkorswim behind it, and the calculator and everything.
Okay. Well, should we bring Steve on?
Let's bring Steve on.
Steve,
do I do anything?
I'm here. Can everybody
do
hear
I
me?
stop or?
Well, Steve, I'm going to make you the presenter. So all you need to
Alrighty.
push the play, the button that says show my screen.
Okay, show my screen, and let's see how I do this because I have 2 monitors. Let's see if I can pick the right monitor. I think so.
All right, I see
Let's see.
a blue screen with a Windows logo on it.
You do, huh? Okay, let's see. I think it's this one. I think this is the one that I want. Are you seeing my wristdoctor.com tour right now?
I see it.
Alrighty. All right. Charles, nice job, and I always love watching that. It's pretty cool, and to see I thought that was great when we had a live example from the audience. So I always love seeing that. My name's Steve Rosenbaum, and I'm behind the scenes most of the time. My job is the member experience manager. That is to make sure that you, as a Risk Doctor member, get the ultimate experience. Our job, we like to say that we would like Risk Doctor to be your last stop on your quest for options education. Certainly, you won't find many people more knowledgeable about options than Charles. We've amassed hundreds of hours of video, audio, thousands of pages of content. We've got so much there, and it's high quality stuff. Our biggest challenge is serving it up to you and keeping it fresh and current, because there's a continuous flow of new stuff. So that's what I wanted to show you a little bit today. I'm going to spend just a couple short minutes. If you'll bear with me, I want to take you in a quick tour of riskdoctor.com so you see what that's like. And then we're going to culminate with a special offer that was hand-selected with Chris Smith's input, based upon the discussion, based upon the group, everything you've seen here tonight. I'm sure everybody loves their Dimonetrics Java, and you will know how can you buy it. And I'm going to show you, but we're going to give you lots of things to go with it to make it go that much further. So with that, let me switch over here and bring up riskdoctor.com. And by the way, I've got up here the PDF. Did everybody get that link, part of that experience? I want to make sure that you got the PDF link for tonight's presentation. You could follow it at home. You could blow it up if you had trouble seeing it on the screen. It's all there for you. So there's, in my address bar, you see that. I think in the chat window we also have the link. Chris, I'm sure you'll serve that up to everybody after tonight too, right? Send them a link to the PDF. All right. All right, at riskdoctor.com. Okay. Alrighty, I already lost what I was looking at. So let's go here. What I want to show you here is riskdoctor.com. We have a members area and we have a public area, and then the blog is on the public area. The Risk Doctor page looks like this if you come to riskdoctor.com, and this is where people get to put in their name and address and get our popular 5-day options trading education and learn a little bit about Charles. And of course, you can see all of our products here by going to bestsellers and following it that way. And we also have a blog back here. And our blog is pretty unique because, as I mentioned to you before, we've got lots of material for you, new material coming every single week as Charles is doing more videos and more discussions, and he loves to answer people's questions. We have what we call rarely answered questions, or RAQs, and a regular Q&A session, and you can be a part of that. And that turns into new content every single week. When you come to the blog, what you're going to see is we put certain amount of content out there available to everybody so you can see it. But you can also see that we require a login and a password. And the reason why is because we've got different levels of membership. And the higher the level of membership, the more access you have. So for instance, last week we posted this. It says Options Trading's Questions and Answers, number 1, part 1 of 3. This was a 3-part video series plus a PDF, all right? And we always serve up the first part of the video to everybody. Everybody gets to watch it for free. So right now I am not logged into the area, and I get to watch this for free. If I push that button, it's going to load up. But what I'm not going to be able to do, you can see the little policeman says stop. There's protected content that you can't see unless you're a member, a Step 2 member or higher. If I'm a Step 2 member or higher, I can put that in here. And if I put it in there, then the policeman's going to go away, and behind that is going to be the protected area. So that's why if you go to the screen and you see all this kind of stuff, you know, that's for you to know that we'll give you a lot of stuff for free, but we do have protected content available for our members. Okay, so what does membership look like? If you go to the membership area, this is what that looks like. All right, we have got step 1, 2, 3, and 4. 3 and 4 are not quite online yet. So for now, we're going to focus on step 1 and step 2. And step 1 is our free level membership. Step 2 membership also gives you access to our Foundations of Options course. It's one of our most popular courses. We sell it for $97, but you get it as part of your membership for step 2. And step 2 is really inexpensive. It's only $26 a month. And not only are you going to get Foundations of Options, but you're also going to get, as I mentioned, access to all this stuff on the blog. When you become a step 2 member, I'll show you real quickly. I'll just type in and if I didn't have a typo here, watch what happens after I log in as a step 2 member. You're going to see that the policeman goes away. Okay, now the policeman's gone, and the other thing, this is what the policeman, he was blocking all this. Part 2 to the video, Part 3 to the video, and the PDF. So that all comes with that step 2 membership. For only $26 a month, you'll always get access to all that protected area on the blog. So that's why it's a real value. There's a continuous stream of new stuff, and we always throw goodies at you also just from the archives and the vaults, and we keep bringing more and more of it out there. So I just want to show you that. That's what the website looks like. Let's go to today's offer page. Chris, do you want to put the offer page address in the chat box, please?
All right.
And I might have that handy if maybe you're muted. There it is. Okay. In the chat box is the link, and it's going to take you to a special page prepared just for you. There's a lot of information here for you to understand a little bit about Charles' background, but also when I talked to Chris, Chris said, look, let's we're a risk doctor, so we have a prescription, and you're going to read the story about Charles and how he has cured people's options trading pain. So we have a prescription for you that's going to help you discover how the risk doctor sees options. It's going to help you master butterflies, condors, and wing spreads, and it's going to help you identify time and price targets and apply the right strategy. So we start off with a little bit of education in the Risk Doctor Member Center. That's number 1. Number 2, we picked some products here that best illustrate. If you get Dimonetrics Java, you're going to want to know how to use it. You're going to want to see those examples over and over again, just like Charles did tonight. And that's why we picked these products. Number 1, the strategy intensive on butterflies, condors, and other wing spreads. Number 2, what we call the blend. These were recorded from live presentations that Charles did before, working with an audience, solving their trading dilemmas, options trading, the blend from San Francisco, and then we also include another one from Washington, D.C. Now these products normally sell for, this one's $199, strategy intensive, and the options trading training, the blend on our website is $149, and in DC is also $149. And then we've got the Dimonetrics charting software, the Java that you watched today. Everything that you saw Charles working with today, that's what this product is right here, Dimonetrics Java. So if you scroll down to the offer page, here's what we have for you after you get past the testimonials. All right, if you want our education bundle, that's where you get the recordings of the butterflies, condors, and the wing spreads, plus the live presentation, recording of the live presentation from San Francisco and Washington, D.C. Those 3 together are $497. They're going to really help you understand how to use Dimonetrics Java. If you want the Dimonetrics Java package, we sell that for $1,099. All right, but if you want to buy everything together, it would be $1,596 plus $26 a month. We're going to give you everything together for $1,100. That means just for an extra $1, we're going to give you all this education together. We're also going to give you 1 month free membership, the $26 range of the of our membership club, so you can see everything that goes on there. You get to enjoy the first month for free. If you like it, stay with us, and we'll bill you after 30 days. If not, just quit anytime within 30 days, and you won't be billed. But that's what our offer is for you. And, again, this is the website, theoptionclub.com/Dimonetrics. The offer is live. We're going to keep it up here for 3 days. Give it a chance. You can look it over tonight, sleep on it, look it over tomorrow, whatever you like. We'll keep this live for 3 days for you to get the roughly $1,600 value for $1,099. and that is an exclusive opportunity for Option Club members. You won't see that on the website. Chris, that's all I have. Anything you'd like to add?
No, other than when we put the package together, there was a real focus on trying to pick out the appropriate educational material so that it really interfaces well with what Dimonetrics is intended to do. And what it's intended to do is help you identify the symmetry in the market, identify a point in time and a price level that the market is likely to head towards. And then the education is there to help you find a risk-defined spread that makes sense in the context of what you see happening in the market. Anyway, the educational content is extremely deep, and I think it just makes a tremendous amount of sense to incorporate that into the technical analysis, because the technical analysis is great, but it's when you really understand how to take an option strategy and really kind of find the right fit that all of these pieces start coming together.
Hey, Chris, if I might, I just heard my email ring, and I think that was just somebody may have already checked out. I want to mention that I still have to put together some of those download pages, and it might take an hour or so. We put this package together. We were running up against the gun. So go check out right now, and you can expect the email within the hour. If after that, anytime you check out, you're going to get the download information instantaneously.
Okay. I did record the presentation, folks, so I will try to have it up perhaps sometime tomorrow or so. I'm going to get it up as quickly as I can. If you want to re-watch any portion of it, you can find that on our video archive, which is accessible from the main Option Club page. But I hope everybody enjoyed the presentation, and I encourage you to take advantage of the offer that Charles has made available to you. And with that, I think it might be time to say good evening. You guys still online, or have you already checked out?
I'm here. I muted for a second, but Chris, of course, I'd like to thank you, but I want to thank everybody who joined us tonight as well. We look forward to seeing you over at riskdoctor.com.
I don't know if anybody can hear me, but thank you.
Dwayne is asking if the offer is good through Sunday.
Let's see. We said 3 days, but let's, Dwayne, if you need till Sunday, I'll go ahead and we'll keep it up through Sunday at midnight Central Time.
There you go. Sunday midnight at Central Time is the deadline.
So we'll say 11:59 Sunday, just so there's no confusion.
Beautiful. All right, you guys. Have a good evening.
Thank you.
Thank you, Chris. Good night, everybody.